Twitch as well?
We are live, Flood. We're live right now.
All right.
What's going on, everyone? We're live.
Yep.
We're live today with Flood, aka Thinking USD, aka founder
Since
of
we
the.
started this case, our client lost his alibi.
Hey. I have Twitch
The
playing in the
prime
background.
suspect gets beheaded.
The beauties of starting a live show. We're live with Flood. I'm pretty excited about this one. We're going to be talking about trading crypto derivatives and everything that goes along with that. Thanks for coming on, Flood. What's going on?
Thanks for having me, Luke. I mean, really happy to be here. Hopefully we can get some things straight for a lot of people who have questions, about derivatives, crypto derivatives in general.
Yep. So, first of all, before we dive into any of that, who is Flood? Like, I'm always so curious. I see all these names. I see all these avatars on Twitter and in the community. What is that picture? That's obviously not you looking over here to the right of me, you guys on YouTube. And what is Flood? How'd you come up with this?
So this avatar is Arthur Rimbaud, and he's a French poet. So it actually has nothing to do with crypto, but it was kind of an inside joke when I was with my friends in college that I really looked like him when I was younger, and in a lot of my younger photos. Obviously, he was like, 17, 18 at the time of this photo, but I wasn't the exact spitting image, but it was pretty close. So I figured like, hey, why not go with a semi, representation of what I look like, and then still remain anonymous. And then Flood, a few people know where I got Flood from, but it's not really anything specific. It's it's just kind of a name that sounded good, and I went with it. And it picked out. Yeah.
It works.
But
I mean,
my hand.
Go
Yeah,
ahead.
no, I mean my handle, right? Thinking USD, like money on my mind. That's kind of the biggest thing. But yeah, everything else just kind of random assortment.
Yeah, that's fair. I mean, the first time I saw it, Thinking USD made sense, and I got that. And I looked at Professional Knife Catcher, and then I'm like, Flood, there has to be a backstory, and who the hell is that guy? But anyways, good to know. Got tons of inbound about tonight's episode. You have built up a serious platform, and I think it just kind of goes to show the whole movement and information you're sharing, and kind of that people are definitely looking to you, both for setups, trading, kind of everything in the space, and also the crypto cartel. I mean, you have one of the largest, if not the largest, correct me if I'm wrong, the largest Bitcoin trading community on Discord. How'd you start that? When did you start that? When did you come to Twitter?
So yeah, I mean, I really started taking Twitter seriously for crypto in about early 2017. I'd always followed people, but I wasn't really aware of just how prominent the crypto Twitter sphere was. Even earlier, like just following Cobain and Orca and Angelo.
Yep.
Just people who traded derivatives and that I kind of who I thought were smart people. And then later on in the year, like December 2017, when we were kind of at this bubble peak, I was really fed up with a lot of people who had paid groups who. Not that there's anything inherently wrong with paid groups. I mean, you're not forcing anyone to join them, but I just kind of saw like, hey, why don't we provide something free that's a community with, people who actually trade, right? People, we have professional traders on our platform who will just, shoot the shit with people who maybe it's their first week in crypto, right? So it's a great blend of teachers and students. But I think the main selling point is that it's all free. I mean, we have zero incentive for anything. I think the shadiest thing we have is like a referral link section, but that all goes to paying mods or admins or any cartel sponsored events that we may have in the future. But yeah, we just wanted a free place, a free community for people. So that's kind of it. Yeah.
Even the part you said, the shadiest part is your referral link. I mean, correct me. I mean, you're using your BitMax referral link. Even that's giving a 10% discount. So you're even helping people with with the shadiest part of your program. You're still helping people.
Right. Exactly. I mean, it's a 10% discount for a platform that the majority of people use. So, and obviously, there's you have no obligation to use it, of course. But yeah, it is it is 10% off.
Yeah. One thing that I noticed too when you came in, and I'm not sure when I stumbled across your Twitter, there's so many accounts out there, so many that are sharing kind of more BitMax and derivative kind of trading and setups now than there maybe was in 2017. But one thing that I noticed, and I don't mean this in any kind of negative way, was you almost had kind of a chip on your shoulder, and I think you explained it in terms of setting up the crypto cartel and setting up that free community, and it's something that I think is pretty cool because it's been fun to watch it grow. So
Yeah, I
respect.
appreciate the kind words, man. I mean, everyone who knows what they're doing on Twitter kind of comes into the space and they see these really big accounts that, you know, have been early adopters but may not necessarily have a finance background. Not that
Yep.
there's anything inherently wrong with that, but they get some concepts wrong. And the most notably, like, think about people saying like, "Oh, I'm up in USD for altcoins," right? I
Yep.
mean, that's incorrect. You're underperforming the index, right? You're underperforming the pair.
Yep.
So just basic stuff like that, I kind of saw, and I definitely tried to punch higher when I was a little account, like many people do. I mean, people leave. I tried not to be nasty, but I tried to hold people accountable. And once I realized that no one's really going to lose followers because you quote unquote expose them, or you show that they're incorrect or that they don't know what they're talking about, I figured, like, instead of criticizing people, why don't I just try and create a community, or try and share my knowledge rather than be critical of others, right? And it's really just kind of blown up from there.
Yeah, that's massive. That's a concept that I totally can get behind. It's almost like instead of even kind of tearing down, because there's always going to kind of be the bad actors, and even if the bad actors make up the majority, it's almost like instead of tearing them down or kind of exposing them, if you can just kind of put them out of business by providing more value, it's like you'll just kind of see where the chips fall 1 year, 6 months, 1 year, 5 years down the road. People playing the short game are just going to lose anyway. So, anyways,
yeah,
pretty cool.
I agree.
That's the background. Before we get into too much of the derivative stuff, I want to talk about a tweet that you just sent out tonight. It's timely for everyone watching tonight as we're kind of watching a little bit of a Bitcoin sell-off and some strange movement in terms of alts. You talked about shorting some alts or being short alts with a high premium and using that as a hedge. Can you break that down for everyone listening? Kind of what are you talking about in terms of as a hedge? What are you talking about in terms of shorting alts, and where would you do that?
Right. So, I mean, in crypto, I assume everyone has net long exposure, or most people, right? And, BitMax is a great platform for not only arbitrage, but also for hedging your spot exposure. So, for those who are unfamiliar, Bitcoin is a derivatives exchange, meaning you're trading derivatives products, futures, and options, but they're denominated in Bitcoin. So, basically, what I meant by that was that you're able to short with leverage altcoins, TRX, Litecoin, Ethereum, Bitcoin Cash, that have decent liquidity at a premium, right? And then you're able to protect yourself against potential downsides in the market. So it's a very, very good hedge, because it's like you're selling Bitcoin Cash for a 2 to 3% premium, and you can use leverage, right? So that you have less counterparty risk by having to keep Bitcoin on the exchange. And you're protecting yourself against the downside, which, we kind of saw today. Once I saw the kind of Syscoin going to 96 Bitcoin, I was like, okay,
Yep.
Might be a good time to maybe, protect my long position. Or even just, what people also don't realize is when you have Bitcoin just sitting on BitMax, your USD value is going to fluctuate, even if you're
Yep.
not long or short, right? So, just hedging shorting altcoins at a premium is a great way to just protect yourself.
And at a premium. So I saw Aurelius, and I'm not sure if he's in the cartel. There's so many of you guys that can't keep up, but he's had a couple good threads, and you also touch on this concepts of contango or backwardation. Why would a altcoin be trading at a premium on BitMax? Why is it not just trading at the spot price?
Right. So Aurelius actually is a staff member in the crypto cartel. He's been with us for a really long time, pretty much since the inception. And we've definitely learned a lot from each other, I'm sure. So yeah, why do altcoins trade at a premium? They trade at a premium because of leverage, decreased liquidity, and people willing to pay for the willing to speculate on the price of a coin at a future date, right? So
Yep.
it's mainly it's mainly the leverage, I think, in my opinion, that gives us this basis, which is the difference between the futures price and the spot price
Yep.
on BitMax. Just because people say, hey, if you give me 5 times leverage, I'm going to be more willing to pay 2 to 3% more per Bitcoin Cash because I'm risking less Bitcoin as collateral, right?
Yep.
And I don't have to keep, you know, 3 times that amount, which I would have in spot value, right? If I wanted to buy 100 Bitcoin spot, I would need the full amount of Bitcoin, and I would, probably keep it on an exchange if I wanted to sell it quickly. And then on BitMEX, you would only have to keep a third of the Bitcoin, or even less if you wanted to use higher leverage, right? So that's why people are definitely more willing to spend a bit of a premium to trade these derivative products.
Do you think momentum also plays a role? Because, I mean, if you think back on kind of how futures markets were started, looking at commodities and kind of traditional assets, and looking at maybe if I'm a consumer and some producer has an excess supply, and I want to buy something, maybe I want to buy corn, but I don't want to pay storage costs and things like that. That can kind of insert a premium. Bitcoin obviously doesn't have that, but what you see on BitMax and what you see on a lot of these futures of altcoins, especially kind of when sentiment shifts or when momentum shifts, that premium gets jacked up. Do you think momentum also plays a role?
Yeah, momentum, absolutely. And then you also have to take into account of, orders being liquidated, right?
Yep.
That can kind of push the market up as well. The decreased liquidity, I think, does play a little bit of a factor for the premium. I
Yep.
mean, market makers kind of have carte blanche in the sense that they can, quote whatever skew they want, and if you want to have a market order executed, you're just going to have to, eat that little bit of slippage. But yeah, I agree. I mean, it does give you a lot of flexibility, and obviously decreased counterparty risk that, spot markets don't really give you, right?
Yep.
Yeah.
Counterparty risk. That's an interesting,
Mhm.
especially taking into account it's notable tonight. Looking at Binance, looking at having to shut down withdrawals and deposits. What are you talking about with counterparty risk? Why should people be worried about that?
Right. So counterparty risk is just you keeping coins, right, or assets on any exchange. It has the ability to be hacked. It has the ability, and also you have the quote unquote risk of being hacked yourself, right? So you have
Yep.
exchange risk and you have account risk. If your computer is compromised, I mean, it happens to people all the time.
Yep.
I use YubiKey, so I'd like to think I'm pretty safe. But you always have that potential of getting your coin stolen. And counterparty risk also, in the sense, if you read the BitMEX terms of service, you'll note that they don't guarantee any payout. So you can have a winning trade, an incredibly winning trade, and they can auto deleverage your trade, or actually just outright not pay you if they feel like it. I've never heard of that happen, or of that happening. But there is always the possibility, right? So that's what I mean by counterparty risk.
And for someone like you talked about storing your coins, and I think security is one of those things in crypto. There's so many risks that you take on,
Mhm.
that you get in trading traditional assets or investing in traditional assets, but also kind of those risks that I think we're compensated extra for, and security is one of them. Securing your coins. You don't trade too many coins, do you? You're mostly focused on Bitcoin. Why is that? Why don't you play too many alts? We had a interesting little discussion about this.
Yeah, so thesis is very simple. It was really highlighted to me by someone named Crypto Ray on
Mm-hmm.
Twitter. So credit to them. But they kind of showed me that, hey, altcoins volatility is typically higher than Bitcoin's volatility, and annualized returns may be roughly the same, or even a little bit more in some cases. But you're almost always better off just levering your Bitcoin exposure, right? If you wanna maximize the efficiency of your portfolio. So I mean, for me, why don't I trade alts? I mean, lots of reasons. I think fundamentally, right? I'm not a fundamental expert by any means, but I think it's very clear to see that if you really have to think of scenarios, hypothetical scenarios, uh, to where your altcoin has value, has real world value, there probably isn't value there, right? If so, for a lot of altcoins that I see in the white papers that I've read in the past, a lot of them really just make no sense, right? Or are such, you know, out of bounds kind of ideas, like, oh, like, you know, I'm not going to call out any altcoins in particular, but you know, just many that you see that have just very, you know, basic problems for even someone like me who's not exceptionally technically well versed, right? But
Yep.
uh, it's quite clear that, you know, there is a lot of garbage in the crypto sphere. So I try and stay away from alts almost completely. I do have a lot of privacy coins, just because I think that fundamentally they do and will provide value. You know, whether it's for shady people or normal people who just value their privacy like me.
Yep.
You know, it really depends, right?
Yes, there's two sectors that I would probably always overweight, or I have been overweight since I got in. That's privacy and infrastructure.
Mm-hmm.
Looking at coins past Bitcoin, maybe Ethereum or infrastructure projects like that, where dApps are going to be built. Is there any scenario, or I guess, could you even understand an argument or agree with an argument that says maybe you should hold some small percentage of alts if you're kind of looking at maybe, you know, instead of just day to day or this year's returns, maybe looking at 3 years out, 5 years out, 10 years out, maybe more of a venture capital approach? Does it make sense, in your opinion, to hold alts, or would you rather just be holding a levered Bitcoin position?
I mean, you know, if we have if we see less and less correlation with Bitcoin, or we see a flippening, I think that, you know, you should absolutely plan for that potential outcome of the crypto market, right? You know, it's really hard to value things that we have never really had in the history of the world, right? I mean,
Yep.
we've never really had anything like Bitcoin, so it's hard to say what the future will hold. I mean, I never thought Bitcoin would be worth $20,000, right?
Yeah.
And you know, in 2017, you know, we just breached that milestone, right? I mean, I was in disbelief when we broke $5,000.
Yep.
So it really depends, you know, what you're looking to do and what your views are long term and short term, right? So in the sense of, like, I don't think there's anything wrong with holding, you know, a single digit percentage of your portfolio in speculative altcoins that you either fundamentally believe in short term and long term. But I would always recommend, as of this time, until something changes like a flippening, to have the majority of your portfolio in Bitcoin, levered or unlevered. I think it's almost always going to outperform.
Okay. And it's funny you brought up 20K, because that came and went last year. And one of the tweets that I think has stuck with me, I think you even put this out maybe in February when Bitcoin was actually closer to 20K than it is today. And you talked about, I guess the thing that I find most interesting still on Twitter is because it's so focused on, I think everyone kind of gets put in one bin, whether it's me or whether it's you or some other account, of their solely being a trader, and maybe sometimes it's merged of being an investor, and sometimes you're just hedging or managing risk. You're not looking really for a win there. One of the tweets that stuck with me was you talked about hedging kind of with 1x exposure or unlevered position, being short Bitcoin, and kind of creating an artificial cash position. What does that mean? Can you kind of break that down for people on how that'd be beneficial when, let's say, Bitcoin drops from 20K to 6K? How would that help if you were kind of short Bitcoin? What does that even mean?
Right. So that's actually a question I get all the time, and you know, I love answering it. I never get tired. So the way that inverse contracts work on Bitcoin, when you go long Bitcoin, you're betting that the price of Bitcoin will go up, and you're putting Bitcoin as collateral. So that actually has more risk than the opposite position of being short, because you're betting that Bitcoin's price will go down, and you're putting Bitcoin as collateral, right? That's that's basically the mathematics behind inverse contracts. So when you're short with 1 times leverage, you're going into something that's called synthetic US dollars, because people are paying you, who are, right, for every long there's a short, it's a peer-to-peer exchange. People are paying you to speculate on the price of Bitcoin, and you're essentially just supplying liquidity. So the US dollar value of your Bitcoin will never change, and you will never be liquidated. If you are in a 1x short on a futures position. If you're in perpetual swaps, you know, you're going to have to worry about the funding, but the US dollar value of your Bitcoin will never ever change if you're 1x short, and your liquidation is infinity because you're technically in cash. So I think that's just a great way to quickly go into cash if you don't want to or unable to use, fiat exchanges, right? Like Gemini, GDAX, Coinbase, etc., right? If that's something that you want to avoid, you can, instantly have zero Bitcoin exposure hypothetically, right? If you just 1x short. So it's just a super quick way. BitMax has great liquidity. It's just superb to, completely mitigate your risk.
Yeah, I think that's also one thing that really scares people, especially looking at Bitcoin, an asset that has gone up a lot more days than it's gone down, is being short Bitcoin. And they're kind of always, I think one thing that comes up a lot, at least in my messages, and I imagine yours as well, is people are kind of always looking at it in terms of, is shorting Bitcoin, it's almost like every trade kind of as a win. Maybe instead of using a trade or using a setup almost as kind of a way to manage risk. So if you are net long, I imagine most people are net long, especially if you're listening to this. Let's say you're net long an arbitrary number, 10 Bitcoins, locking in the dollar value of 2 or 3 of those Bitcoins. It's not really a play of you think you could increase your stack, but it's more of a play of kind of locking in that dollar value. So I think that's
right.
that was a pretty powerful tweet. I think that probably helped a lot of people. How often are you hedging versus speculating with those futures and spot? I think that's one thing that's really swept Twitter is now every single Bitcoin setup I see, it seems like everyone is using both the swaps and the futures to hedge. That wasn't being talked about last year. I think some people were doing it, maybe I was doing it, but not everyone was talking about it. This seems to kind of everyone seems to be using that method. How often are you hedging positions, and how often are you kind of just net long or net short?
Right. So, yeah, I mean, not to, not that I took credit for that. I mean, people have been doing it on BitMax since BitMax was made, right? I mean, BitMax was kind of primarily an arbitrage exchange at first. They really drilled into people that, hey, market making is extremely profitable on our platform. We pay you for limit orders, and it, that's kind of evolved into traders and speculators being able to take advantage of the price difference between futures and swaps. And yeah, now people realize, like, oh my god, I can, instead of needing to take profit on my long if funding is in my favor, I can just short at a premium on futures, right? And so people ask a lot about arbitrage and if it's still viable even if you're not a high frequency trading firm, and it absolutely is. I mean, I'm sure you're well aware of this, but like cash and carry is extremely simple for the average person. Just using futures when they're trading at obscene premiums when we're in the bull run, right? I mean, I remember at 18K, futures opened and we're trading at 22K for a while.
Yep.
I mean, that's an obscene premium.
Was that That was March futures too, right?
Yeah, that was March. Yeah, that was March futures,
Yeah, I remember.
which closed quite a bit lower than that.
Yeah.
But if something very simple that the average person can do is buy spot Bitcoin and then short the equal US dollar amount of these futures contracts, with or without leverage. And then since futures settle at the index price or the spot price, you've captured that, 2, 3, 4, 5% premium, depending on what price you got filled at. So, that's something super simple that I'm sure people are, aware of and have been aware of for a long time. But, you definitely see more people talking about, like, okay, I'm long swap and I'm short futures, or I'm long futures and backwardation and I'm short swap, right? So you're obviously aware of this, but right,
Yep.
backwardation and contango.
Yep. I was going to ask
Backwardation
that
is
next. Just so you can go for
right.
everyone else.
Yeah. So backwardation is when futures contracts are trading under swap or under the asset's price. In this case, I use swap since I'm trading just on BitMax. I'm not really using spot Bitcoin exchanges that much. But yeah, in this case, I'm just paying attention to if futures are trading above, you're in contango, and you can take advantage of that basis, with a number of trade setups that are directional. If you're biased to the upside, if you think that Bitcoin, is cheap at these prices, then you can set up trades where you limit your risk, but you're also taking advantage of the price difference between those two contracts.
Yep. And just to break that down one more time for those of you guys who didn't catch up on it, contango whether it's leverage, like we talked about earlier, why something would have a higher basis or why something would have a premium, whether it's leverage, whether it's momentum, whether it's sentiment. Contango is the futures price going to be trading higher. Backwardation is that futures or that settlement price, or that price at settlement date is going to be trading at a discount. So those are kind of the different strategies where you can be long one, short the other, kind of being long and short at the same time. So it's been interesting to see more of the retail crowd diving into that. I'm not sure that everyone understands it, but I know that the vocab's definitely been throwing around more. So past just futures and swaps, one of the more interesting things that I'm kind of ready to watch take over the crypto Twitter sphere and maybe become a meme is now Bitcoin options. You brought this up the other week. You published the first implied volatility study for Bitcoin. A pretty cool moment in Bitcoin's history. You can kind of take credit for that. What are options for Bitcoin? Why would you be using them? Are they mostly speculative, or are you mostly managing risk with them?
Right. So, I mean, unfortunately, being honest, Deribit is a great exchange, but they do suffer from liquidity problems.
Yep.
And the market makers are just going to rip your eyes out because they're quoting whatever. There's like almost zero volume on their options. If I'm being honest, right? I like their exchange. I think they have a really great platform. They have no overload, but I'm always going to be transparent. I'm not paid by them. I have no relationship with them necessarily. But I think that options will be valuable in the sense that you'll be able to take advantage of volatility in ways that you can't with these linear derivatives, right? With futures contracts, you can't take advantage of this time decay of selling volatility, right? Selling premium and buying options when they're cheap with futures contracts, because right now it seems like the futures premium or discount is almost entirely dictated based off sentiment, but also purely based off what the funding rate is. If we have max funding, you're going to see people more willing to buy these futures contracts at higher premiums, right? If they're looking for longer term positions. But now that they kind of changed the funding rate, where it's not just the mark price versus what swaps are trading over that 8-hour period, we have a dampener. We're definitely closer or just under to the lending rate on Poloniex. They use that as their reference basis to see if arbitraging is worthwhile. I think that options, and like I said, I'm repeating myself, but if volatility continues to die, like it has been, we've kind of had this trend where volatility is correlated with Bitcoin's price, which is kind of the opposite in traditional markets, right? In traditional markets, we see people willing to pay, outrageous premiums on options contracts, when the price is falling because everyone's really scared, right?
Yep.
But with Bitcoin, we kind of are losing this retail interest as price goes down, which I guess makes sense since it's speculative, right? We don't have, necessarily companies that we're evaluating all the time, and that's how we derive our value of Bitcoin. It's decentralized, so it's a whole nother, I guess, like bizarro world of finance where kind of everything you've learned in school is kind of backwards, right? So
there's elements that still apply, but now that now there's no intrinsic there's no cash flows I'm looking at. It's a lot of narrative and emotions. What's right? It's you brought up playing implied volatility, and before we kind of get into that study, I want to briefly touch on what's the difference between using Deribit and using the up and down contracts that BitMax introduced, which are kind of acting like options. What's kind of the difference there?
Right. So up and down contracts, you're not allowed to write or sell options on BitMax. So that's a really big problem because you're not allowed to sell worthless contracts. It's really, I'm honestly pretty disappointed in, and a lot of people are as well. They share my feeling in, BitMax's reasoning behind, bringing out these contracts, especially at first where they had these crazy strike prices that are just, way outside of like what the standard deviation is. And it seems like they were just kind of taxing idiots who have never, they do have a primarily retail kind of trader base, I'd imagine.
For now, yep.
For now, right? they say, well, we're in talks with institutional traders, but I mean, no institutional trader or, leverage fund in their right mind is really going to trade on a platform that'll lock you out and not allow you to sell your position because of overload. But yeah, focusing on up and down contracts, they're a lot more similar to binary options. You know, I mean, for me, I think that everyone should kind of stay away from them. I don't
Yep.
think that anyone should trade them and their volume should go to zero because, the market maker, again, just kind of has this infinite money making tax because at the end, when these options are settling, they can just sell into all the bids that they know are worthless because Bitcoin is not going to move, $500 in a second.
Yep.
But you as a trader who's not the in-house market maker has no ability to sell options that you think are worthless. So that's where Deribit has the advantage, right? Where you can actually sell options that you think are worthless or mispriced, and actually receive that premium. But yeah, on BitMax, ups and downs are they're scams. I mean, honestly, they're complete scams. Yeah.
So the difference is mostly anyone coming from FX or elsewhere. It's mostly kind of playing against the market maker as opposed to I don't know, some kind of straight through processing. You're pretty much trading directly against BitMax in that they're the only ones allowed to sell them or write them, and and well, people can take their bets there.
Yeah.
So the other one thing I want to talk about with options, that implied volatility study. What does that mean for options traders, and what does that mean for price? Even if we're not talking options, like why is implied volatility important? What is implied volatility, first off, just in a sentence or two? But why is that important for people? I saw you plotting the volatility graph on a couple things, and I think whether or not some people understood it, I got a couple questions about whether that was Bitcoin's price minus something. So what is that? what is Bitcoin volatility? What's implied volatility? Why does it matter to the average person?
So, I look at two things, right, that I've only recently really started paying attention to is, the historical volatility, which is exactly what it sounds like. It's the past volatility of Bitcoin, and then implied volatility, which is what traders think through options, how options are priced, what the volatility of the market will be moving forward, right? And that's entirely derived from options premiums. So, I think that it especially historical volatility has an almost scarily accurate predictive nature. I mean, people have seen me post the 24-hour historical volatility index provided by BitMax. Whenever we retest these historical lows, we see massive moves, right? And this makes sense if you kind of just think about it from a purely like VPVR standpoint. If we're trading in an extremely tight range, whenever we have a massive move, people who are over leveraged are just instantly liquidated, right? Because, people who are using high leverage, as soon as the price moves against them, they're just blown out. And then we see these kind of cascading liquidations, and it's almost like the kind of momentum ignition algorithm that we saw on these lower time frames, like on a larger time frame, in the sense that everyone's taking trades in this really, really tight spread, and then once we have a move, someone has to lose, right? And someone has to win. So that's why, looking at 24-hour volatility, whenever it's extremely low, trading in under 2% daily range, as soon as if we have a 5-6% move, a ton of people are stopped out, underwater, and liquidated, right? So that creates these massive like one-sided market moves. And I recently have been really paying attention to it, and it's not predictive in for directionality, right? It's not going to tell you if it's going to go up or down, but you can kind of manage your risk in the sense like, okay, I should probably have a tight stop loss here, because if the market moves against me, it's going to keep going, right? I mean, hypothetically.
Yeah. So that's another concept that I wanted to touch on at the very beginning that I think is massive, and I think it really gets brushed over. Is there's certain things that you're doing, like you just mentioned, a little nuance there of you're expecting kind of a major move, you don't know the direction, you're smart enough to know you don't know the direction, so your only move would be to maybe play with a tighter stop loss or understand that there's probably more risk associated with an expansion move coming. Different things like that aren't always directional. It doesn't mean there's a big move coming, I need to go all in long, or I need to go all in short. That just means you might need to tighten your risk management. how many plays are you doing like that? How can people, I guess, learn to maybe do more things like that as opposed to looking at every single move or every single consolidation or expansion as a chance to make money?
Exactly. I mean, something that I also wanted to kind of really highlight is people talk about risk reward a lot, where they're saying, okay, I'm risking X amount because my stop loss is here, and then my target is here. So this is, I have like 3-to-1 risk reward. I can put my target at 800K, and then I'd have an astronomical risk reward. Does that mean it's realistic? Does that mean, my risk reward is actually like 1,000-to-1? No. So, paying attention to these kind of uh, predictive indicators in a sense, as opposed to like lagging indicators like RSI and OBV and stuff like that, you can kind of know when it's time to take risk off the table or when it's time to add more risk. Also, it can be predictive in the sense of like, all right, if we see implied volatility or even just overall volatility trending up, that could be signs of an uptrend coming, right? Just based off historical data. So yeah, I mean, just even something super simple, like if you're in a long that's, in a considerable amount of profit, right? Let's say you're long from like $6,000 and you see that, hey, 24-hour volatility is retesting yearly lows. I'm definitely going to want to short, right? I'm definitely going to want to hedge a little bit of my exposure. That way, in the event that it does go down, I'm protected. I'm making money, right? I'm not just net losing. And then, that's a very simple example, but it actually happened no less than like 8 hours ago, right? Daily candle closed, and then we dumped.
Yep.
Right. So, it's these little things that the average trader may not be paying attention to, but, people who want to kind of give themselves a little bit more of an edge could pay attention to, and it could maybe, allow them to, root out some weaknesses that they have in trading. Like everyone knows what they struggle with the most. So, having things that give you additional data can definitely up your game.
One of the things that a lot of that resonates with me, and I agree with almost all of it. One of the things that someone else just asked in the YouTube chat, I want to take one or two of these live questions, and then we'll wrap it up. And it kind of goes hand in hand with risk management. They said, does Flood use cross, and how could you be using cross or isolated margin to kind of reduce risk, and what do you use? I'm honestly curious.
Yeah, so I'm always on cross, but I'm definitely taking less than 2 times leverage for 99% of my trades. I mean, I'm honestly, I have a decent sized bankroll to where, trading is worthwhile for me, even if it's less than 1 times leverage for long specifically, like for net long positions. Because net short, I'm just gonna do 1x short, right?
Maybe for someone else with a smaller account, do you think does cross make sense, or is there any times where I think a lot of times people will just up the leverage really just so they can just up the risk. But does cross make sense for everyone, or does isolated margin kind of what are the benefits of both? I guess.
Yeah, I think that for people who understand cross leverage and understand that, as you add to your position, your leverage is going to increase and you're going to have more and more risk, especially if you're taking up longs. I think, actually, let me rephrase that. I think that cross leverage should be used by traders who really have a good grasp of the math behind inverse contracts and really understand, when it's time to throttle the leverage and when it's time to use under 1 times leverage. And I think that isolated margin is better for newer traders because they know the exact amount that they're risking, and that can really be their risk reward, right? So yeah, I think that it's definitely, it's good to understand why cross leverage is valuable, and it gives a lot of flexibility for experienced traders. And it's better than like having to pay attention to like what my leverage is on futures, what's my leverage on swap. It just puts your entire account as your collateral. But yeah, I think that, yes, I think that cross leverage should be used eventually by everyone, just because it's a lot better, just flexibility wise and just kind of ease on your brain, in my opinion. But yeah, for newer traders should definitely stick to low leverage, but it should be isolated.
Cool. Yeah, I just wanted to hit one more of those risk management things, and it also makes sense because someone fired that in. The one thing that I kind of want to wrap up on that ties together a few of your thoughts kind of here at the end was looking at how low volatility's been, looking at maybe some hints or some tools that you can use to maybe suggest that volatility is going to increase, and just kind of your outlook on the markets. Now that futures have expired, kind of that first set of futures from the CME expired on the 29th. We had a nice little uptick in Bitcoin. Volatility's been low, but it looks like it might be picking up. What's your kind of outlook going forward, 1 month to 3 months? It doesn't need to be a call, but where do you think volatility goes? Where do you think volume? Do you think volume picks up? Do you think futures had any impact on what just happened?
Yeah, so I mean, purely from a technical aspect, I think it's really important that we're not trading under these February lows when we had, that huge capitulation at like 5.8.
Yep.
I think it's important that we're not closing and trading below that point, because that would signal bearish to pretty much the average person. They're saying, hey, look, lows have been broken and we're trading below it. The outlook is pretty much bearish. So the fact that we had a bounce, and I have a couple of theories as to why we have reasons. I have a couple reasons as to why I think that we bounce after futures expire. I mean, just to put it very simply, like if I have a very, very large hedge position on spot Bitcoin, I'm not going to be able to have that. I'm not going to be able to scale out of that position efficiently, right? So it's much better especially if I want to take on additional Bitcoin spot exposure, to wait until after these futures have settled, my hedge has settled at a very low price, and then start market buying, right? Yep. And that has the added benefit of, kind of saving some people's quarters, depending on when that futures contract expires, especially if you're marking P&L for certain funds, that could play a role in as well. But yeah, so, my outlook for the next 1 to 3 months, I think 7,800 is really the deciding point. We've had a couple decision points for trends, most notably at 11.6, and then again at 10,000, and then also, a minor one at 7,800, where, we hit previous support that's now turned into resistance, and then suddenly we just have relentless dumping, right? And we've seen that for the better part of this year, ever since we had that, 17K mini rally, right? And that was also right after futures settled. A lot of people may or may not know that, but yes, we almost always have, mini rallies after these futures expire. So where I think we're going to go, I think we'll definitely retest 7,800 this quarter. And then whether or not we break that, I think, 10K is the next step, 11.6. And then if we break 11.6, sky's the limit. But, if we fail to break 7,800, I think you should definitely be looking at, middle of 2017 levels. Like, I think that's a pretty reasonable assumption. I'm not promising 40K this quarter. I do think there's still the possibility for 40K by the end of this year. It's getting increasingly unrealistic, but there's always a possibility. But yeah, I definitely think that 7,800 is going to be a really, really important decision point, and the sooner we get there, the better.
Yep. Cool. Well.
Great.
Everyone, thanks for watching. Flood, I appreciate, especially at the end, kind of giving some context as to what you're looking for. Hopefully that explained a lot of things. Thanks for coming on, man. That was fun. Any shills, shout-outs, anything that you kind of want to throw out there? Anything you're looking at? Anything that the people should know?
Yeah, I mean, couple shills, just,
go for it.
People who have absolutely helped me a lot. Crypto Ray, Aurelius, I'll link those two. I'll shout those two Twitter accounts out on
I'll put them in the description
Twitter
too.
later. Yeah,
everyone down there. They'll be down here.
Absolutely, those are two people who have really helped me. I've learned a lot from, and we're kind of a team. Also, anybody who's in the crypto cartel, and especially the staff in the crypto cartel, they've just been really amazing. Doing it basically for free, because it is a free community. So I would just like to thank anyone.
Oh no, did I lose you?
People on Twitter, just the standard. You, Crypto Cobain, I am Nomad, and Angela. Those are just like 4 people. If you're and Crypto Dog. Those are just 4 people 5 people. If you're just getting into Twitter, you should absolutely follow.
I appreciate it, man. Those shills are
Absolutely.
respectable. Yeah, I'll link all those down below as well, guys. If you guys are looking for links, also if I'll link Cartel and everything else like that. I think it's pretty telling of how many people wanted to tune in, watch, and just looking at kind of the chat stroll in. People are really kind of are behind this movement. I think playing the long game and kind of the value you're providing from people without kind of asking for anything in return, or providing way more than people are expecting. I think that ROI is. I guess we'll see where the chips land in a year or 3 years or 5 years, but I think we kind of have the same mindset on that. So I like what you're doing, man.
Absolutely.
Thank you so much for coming on. The people
Thanks,
loved it. We
Appreciate
might have to
it.
do this again. Guys, the links for this are going to be down below if you want to watch this on iTunes, SoundCloud, Twitch, anything. Throw a like, throw a comment if you liked it. Tell me who you want to see next. It would be really cool too. I don't care if you do it, but please do it. Throw me a rating on iTunes, and do whatever. Click subscribe, because there's still guys like Superman out there that have like 100,000 followers, and that's ridiculous. So I appreciate everyone tuning in. Flood, thank you so much, man. Have a good evening.
Thank
have
you
a good
so
4th
much
of
for
July.
having me.
Yeah, this is fun. We'll
And then one last thing, Zcoin.
Go for it.
You guys need to buy Zcoin.
So the one alt that he likes in the privacy sector, he's talking Zcoin. If you guys actually stay tuned, next episode, hit that subscribe, because I am talking Zcoin with the Zcoin team members. So we'll talk about that. We'll talk about privacy coins. Blood, thanks for coming on. I like the shows.
Of course, man. Thanks for
Cheers,
having
brother.
me.
Yep.
Have a great night.
Yeah, you too.